All right, let's jump right in. Today, we're going to tackle a pretty disruptive idea. What if the single best piece of financial advice we've heard our whole lives, saving your money, is actually the very thing making you poorer?
And look, this isn't just some wild clickbaity statement. It's the new reality we're living in. The entire financial rulebook has been flipped on its head. What used to be the smart, responsible thing to do is now a recipe for falling behind. So what on earth happened?
Well, for decades, this was the go-to playbook. We can call it old finance. You know the drill. Save 10% of your income, stick it in a bank account, and just wait. The whole goal was simply to keep your money, to preserve it. But here's the catch. In today's economy, just keeping your money is a guaranteed way to lose your actual buying power. And this slide really lays out the harsh truth of it. When your money is just sitting there in a regular savings account, you're not really a customer the bank is serving. You're actually a lender. You are giving them an interest-free loan that they turn around and use to make a ton of money. You think you're being safe, but really your cash is just being liquidated. Okay, so this brings us to the big villain of the story. The invisible force that's quietly eating away at your hard-earned money. Inflation. This is the number one reason that old model is just completely broken now. And this chart just says it all, doesn't it? I mean, just look at that massive gap. Over here, you've got this tiny little bar. That's the interest you might get from a so-called high-yield savings account. And then over here, you've got this giant bar. That's how fast the price of everything else is going up. If your money isn't growing faster than that inflation bar, you are, by definition, losing wealth every single day. Let's put some real numbers on this to make it sink in. For every $10,000 that you have saved up, you're losing about $500 a year in what that money can actually buy. That's not an opinion, it's not a theory, it's just the cold hard math. The number in your bank account might look the same, but its power is shrinking. This analogy from the source material just perfectly captures that feeling, right? It's like you're working so hard, you're sprinting, you're doing everything you're supposed to do to get ahead. But the finish line, real financial security, is just moving away from you faster than you can possibly run. So, okay, if the old rules are busted, then what are the new ones? Well, it's not about a new trick. It's about a complete and total shift in how we think about money. We've got to move from playing defense to playing offense. This slide breaks down that shift beautifully. The old way was save to keep. The new way is save to deploy. It's the difference between hoarding cash under a mattress and actually leveraging that cash to create more. It's about not just waiting for growth to happen, but actively positioning yourself for it. Honestly, one path makes you comfortable. The other path is what can actually make you wealthy. So let's give this new approach a name. We'll call it the Smart Wealth Strategy. And it's all built around one simple idea. Your money needs to be an active employee working for you 24/7, not just some passive bystander getting its value drained on the sidelines. And the core move is this two-step mental flip. First, you stop thinking about saving. That word implies hiding money, putting it away for safety. Instead, you start thinking about positioning. That word implies action, actively putting your capital in places where it has the best possible chance to grow. You're not just a saver anymore, you're becoming a capital allocator. So how do you actually start? Here's our really practical first step. Figure out what you need to live on for 3 months. That's it. That's your emergency fund. Keep that in cash, somewhere you can get it easily, but every single dollar you have above that amount, it needs a job. It has to be put to work. So where do you put that money to work? The sources point to things they call high-yield assets. These are vehicles built for growth. Things like automated index funds, which let you own a piece of the whole market. You've got tangible assets like real estate. Some people even look to things like gold or certain cryptocurrencies as a hedge against inflation. The point isn't that one of these is the magic bullet. The point is to move your capital out of cash and into assets that have a fighting chance to grow faster than inflation. And of course, every single one of these has its own risks, so you absolutely have to do your own homework. And this quote just drives the point home, doesn't it? Every single dollar that's just sitting there, sleeping in a bank account, means you, personally, have to work that much harder just to stay afloat. When your money is working for you, your wealth can grow even when you aren't. And all of this, it all leads us to one final and maybe the most important idea. We have to completely redefine what risk actually means in our financial lives. So, I'll just leave you with this question to think about. In a world where holding cash is a guaranteed loss in value, Is the old advice of playing it safe actually the single biggest risk you can take with your financial future? Because in 2026, it just might be.